What is going on YouTube? It's Sank and we are back with another one. Now in this drop, coming at you guys with a couple of plays to pick up next week in these markets. But before I kick things off, if you'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, we are just hours now away from the stock market opening and I'm always pumped to kick off a fresh brand new week in these markets because it's just another opportunity for us to make wise investing decisions to help solidify our futures. And if we play our cards right, not just ours, a generation or two below as well. Now the week we've just had in the markets, one of these flatter weeks, but you guys know we're always going to remain alert. Going into next week, be prepared for whatever the market throws at us. Now we could see some extra volatility. If that's the case, we'll just continue to pick up our quality plays on the cheap, ready for their rebounds. Now, I've got dry powder I'm looking to deploy into these markets and I'm looking to double and triple my money over time by being invested into quality plays. So I want to take you guys through how I'm going to achieve that in this drop. So let's run the first one. The first one I've got for that's ticker symbol PINS, that's Pinterest. Now the aim of the game when it comes to growth investing is to get these plays in the portfolio that are nowhere near their peak. But this is the key, they've got to be showing momentum. There's a ton of plays out there in the market that claim they're going to be climbing mountains, but they're not even at the base of the mountain yet. And that's not the case with Pinterest. This is a play showing momentum. And this is one, if you look into the numbers, they're nowhere near the types of maturity levels that you might see with a play like a Facebook, for example. Now, most of their revenue comes from the US, but they're looking to unlock a lot of value through international expansion. It was only a couple of weeks ago, they said they're making waves in Latin America. That's why we saw this stock price climb up above $80. Now, what you guys got to know is a ton of players out there in the market benefited from the pandemic. This pushed their business 1-2 years ahead. But over the next 12 months, a lot of those players won't be able to sustain that price level or the momentum in their business. Now, don't believe that to be the case for Pinterest. As we move through economic reopening, I'm expecting them to be a beneficiary of this as people look for inspiration for travel, inspiration for entertainment, driving up the usage on the platforms. Now, that being said, this is a play to have on your watch list at very least, if not to have some of your dry powder allocation. Now, what I want to see from Pinterest is for them to climb back up to that previous support of $62. Now, on the week, they're on a climb, so going into the next trading session, we'll see how they perform. Now, this is one of these plays you guys want to build up steady over time. You guys don't want to slam down thousands at this price point. Building up steady is going to allow you guys to get the best cost basis, and if you do, that's going to allow you to make the best returns in the play. Let's move to the next one. The next one I've got for that's ticker symbol HITID, that's High Tide. Now this week just gone, we've seen this stock go from $9 down to $7.50, down to its support. This is off the back of an announcement they're doing a bought offering. This is just like the stock offerings we're used to seeing in these growth plays. Now a ton of these growth plays do these stock offerings and it's a real mystery what they even use the cash for. But in the case of High Tide, rest assured they're going to be using that cash to continue fueling their expansion efforts. Open up those retail outlets, making those acquisitions they need to do to continue solidifying their position within the industry. Now with High Tide, what I want to see is them to continue showing stability around support, and the idea there is to continue nibbling at the play if they do, just like the plan is with the Pinterest play, and it goes across the board for all of these growth plays. Now, when it comes to covering off all bases in the industry, all you guys really need is 3 plays. High Tide is one of them. Another one I've spoken to you guys about is IIPR. That's a REIT within the industry. That one's showing stability. When the market lets it, they will make their climb. And of course, the last is Grow Generation. I like to look at Grow Generation as the Home Depot within the industry. Another play, making those expansion moves they need to do to take them to the next level. Our next play, that's ticker symbol NIO, that's NEO, coming in at $34. Now, just like Pinterest, I want to see NEO climb back up to that previous support of that $35 mark and show some stability there. Now, I don't want you guys to think just because EV's down right now, we won't see the rotation of funds back into these EV plays. The EV space reminds me how tech has evolved over the years. There's times when plays like Amazon, Facebook, Apple have seen investor interest. A lot of times when investor interest has moved away from the sector, but over time, these plays have climbed. Now, a lot of your high-class EV plays will show that same type of price action. So I want to put this one back on your radar. Now, when it comes to selecting those EV plays for the portfolio, it's best to stick to those that have that advanced production line, are shifting out cars as we speak. There's a ton of speculative EV plays out there at the moment that will encounter unforeseen headwinds, so the risk with those plays is much higher. That's why I like sticking to the more mature types of EV plays like a Tesla, like a NEO, and I'm liking the movements in NEO, that international expansion push into Europe and the advances in their technology. But this play won't be without a short-term hurdles and we know the shortcomings in the industry at the moment. But regardless, I know the value in this play over time if you're invested, and every other analyst on Wall Street also does as well. So you're in good company with this one. Now, I'm going to bring this one back to your attention. That's ticker symbol CZR. That's Caesars Entertainment coming in at $100. Last time we spoke about this play, they were in the 90s. They've moved up to the 100. I told you guys I like this play, sub $100. This play is going to dip in and out of the buy zone. So whenever I catch this one under $100 and ideally closer to that $95 mark, that's when I continue to build up my position in this play. This is one of these gaming, gambling plays with big potential ahead of him. Again, they're just being held down by these market conditions. This is a play that's got better types of valuation than plays like a DraftKings. That's also a solid bet, but because of valuation comes in cheaper, the risk on this play is much less, but they still have that big upside. This is a play I'm expecting to close out the year closer to that $120 mark. This is a play that should benefit from economic reopening as well. And also we know as every state continues to legalize gaming, gambling, that's going to play into their favor. So this is one I want to highlight for you guys if you're looking to build out your portfolios, continue diversifying, add a play in the portfolio that not everyone else out there in the market knows about or is speaking about, but is a hidden gem in the market and still provides a lot of upside potential. Alright, so those are the plays I've got for you in this one ahead of Monday morning's opening bell on the stock market. Now's the time to be building up your portfolios, but this is the key. You should be focusing on quality plays in the market. Now, these plays I've dropped on your radar in this one are some of the finest plays you'll find in their respective industries. As I say, it's only a matter of time before the market has to do these plays justice. Now, when these plays break through, when they make their climb, that's the point where you guys can have your feet up and just watch those values in your portfolios continue to climb. So if you're rocking with the channel, you know what time it is. Question comes from Philip, says, is a market crash something that you in any way consider when making an investment strategy, or is it a waste of time as it is impossible to account for and prevent? So to round this one up, I'm going to share this one with you guys, and I'm going to teach you how best to navigate crash corrections in these markets, because history tends to reveal a lot more in these markets than people realize when it comes to hitting success or failing in the market. Now, historically, we've encountered many crashes and corrections. Going forward, we'll still encounter crashes and corrections. Now, for every crash and correction, many investors leave the market, but the most successful investors today are the ones who are still invested, because over time we've seen the stock market grow. So first up, what you require is patience, but you also require conviction in the plays to handle them when it goes through hardships. Next up, I always say to you guys, we nibble at these plays over time. Just don't go all in, grow your position steady, because if the market's going to hit volatility, these plays are going to come down, you get them at a cheaper price. That's why it's important to have dry powder on hand to deploy into these markets so you can smooth out your cost basis. That's how you get the best returns once the market climbs. So we know that you need patience, you need conviction in the plays, but you also need to build steady. You also need diversification. So don't just stick to one type of play, growth plays or penny stock plays. Ensure you've got a diversified portfolios. You've got some financials in there. You've got some plays that are going to benefit from inflation if we encounter that down the line, to ensure that your portfolios are covered from every angle. Now, this is also how you hit success, having a diversified portfolio. Put that all together, and going for a crash correction, you are going to encounter short-term pain in your portfolios, but over time, you are going to see them grow and those returns materialize. That's how you win in the markets. So with a crash or correction, it's something that you shouldn't be fearful of, but you should be conscious of. And if you have the right formula, you're always going to come out better the other side. Alright guys, so that wraps it up for this one. If you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. Also, check out a link down below to the Patreon. Join our winning team over at the Discord. Now, ahead of Monday morning's opening bell in the stock market, one last thing to say. Let's go.